Hello, everyone, and here we are. We are at the cusp of something extremely important. What is it? Well, let me tell you, my friends. They are essentially trying to keep you from capitalizing on this upcoming bull market. Yes, I know there's a lot of issues pending, but look what's happening. Look what's happening. Look what they're doing with the stock market right now. It is on hold. You noticed as we await the earnings from Nvidia, the market is on hold. The market is not moving. The market is waiting. What's going on? Well, they're buying slowly but surely. You are waiting. You're saying, "Oh, hold on, we have a recession. Oh, hold on, Nvidia. Maybe the it's over with Nvidia. Maybe it's over with everything, right? The market has gone so high, and now we got a new president. Who knows what's going to happen? We're going to have rate. We're going to have exactly. It is confusing. I know it is confusing. So let me help you not lose an opportunity that's going to last for a while. Now it's not going to last forever. It's not going to last forever because we still have to deal with a major issue, which is going to be the national debt. But we're not there yet. We have a few more years left. Okay? So what's going to happen? Well, my friends, what's going to happen is this. We currently need to understand, we need to educate ourselves, right? You need to understand what's happening. Okay, so let's educate ourselves in a very simple way as far as the economy is concerned. There are two camps out there. One camp is saying, essentially, look, the economy is doing just fine. We're just slowing down. We're having some issue with unemployment, but unemployment went up by, from 3 to 4%. It's still okay. When we looked at and took a look at my previous videos, but if you look at some of the items that I've declared in the past having to do with unemployment, with the GDP, with the confidence, with many items, they are all under control. We are slowing down, but they're under control. But then this is being used as a means of saying major recession coming. Now, obviously, the issue that you have, obviously, is that in social media, if you say that everything is okay, nobody's going to look at you. If you say the house is on fire, then everyone's going to know which house and where and when. So obviously, you'll have people saying, you're wrong. The recession is on its way. The recession is on its way because the Fed has never been able to manage a soft landing while managing inflation at the same time. It only happened once, right? So basically what we're talking about is that he's lowering the rates enough to manage the economy. The only issue is you did it too late, or you're not doing it fast enough, because rates went up 9 times recently over the past 2 years to fight inflation. And that's an issue because now, obviously, we feel that the economy is going to start slowing down a lot. And if it's going to start to slow down a lot, in the past, historically, we have had a recession. So how do we not get a recession this time? Everything looks the same. We've lowered we raised the rates. the housing went down. Some people are losing their jobs. Why not this time? Why is it different? It is different, A, because we're not seeing the signs. B, we came out of a very unusual period of time. We came out of COVID, where we had a recession, but it was induced. It was induced because of the fact that we were not allowed to leave the house, and we had to stay in. So that's not your typical cause of a recession. That really doesn't happen, right? So to that end, obviously you have to understand, once prices kind of stall, that is a time where the smart money starts buying, because nobody's buying, right? They're doing the buying, not in a way that is going to obviously move the markets. That is not how they make money. Because if they do something very huge, very big, everybody's going to realize it, and it's going to move the markets. There are ways for them to buy while no one is buying, so that nobody sees. Therefore, they are taking the opportunity while you are being scared of a recession. They may be buying lots of stock that you're saying. Look at what happened with our friend Warren Buffett. Warren Buffett essentially sold his stocks in July, before at the peak. Exactly. Why? What did he do that? Well, I don't know. Maybe he realized, you know what? I'm selling because I'm making my money. And since then, since I've been going down, but now it's plateauing a little bit, right? Now is the time to make up your mind what you think is going to happen. The thing you don't want to do is you don't want to wait until everybody else is moving and the stock market is up. You say, okay, now it's time to go. Now it's safe to go in the water. You do not make money by following the crowd. You make money by doing what no one else is doing. No one is buying right now, then you buy right now. Why? Because the economy is not about to enter a recession anytime soon. Why? Because we're not seeing on the sign. Now, why? Because it was COVID. Why is this not going to happen this time around? Why isn't? Because that is not what you need to worry about. The economy is strong. The economy is resilient. They're still financing us. Though I wouldn't worry too much about it. Well, what about Nvidia? It's went up a lot. Well, maybe you shouldn't be buying Nvidia, but it doesn't mean the market is dead. Doesn't mean the company is dead. I mean, if you see some pullback, why not? I mean, today I put some options, some call options. Hopefully I didn't make a mistake because I'm just playing the volatility. But you don't want to miss the opportunity. You don't want to miss the opportunity to make money while everybody else is not. You want to be the one that goes in and does what he's supposed to be doing or she's supposed to be doing, which means make up your own mind. Right? I mean, take a name like Socrates. Right? What did he say? And what does that have to do with finance? Well, I will tell you that Socrates said that you should always know that you don't know. You should question everything. And that's what you should be doing. You should question everything and know that you don't know anything. But you still need to take action. Take a look, for example, at the works by Taleb Nassim, the guy that wrote The Black Swan. What does he say? He also says the same thing. I know that I don't know. Therefore, I am cautious. But I also need to be invested. When you are invested, for example, with options, okay, you don't buy options by trying to look for a direction. Right? You buy options, for example, so that you buy options really to protect yourself. You don't know when it's going to hit. You don't know when. You don't buy how much. So you're buying options. You're not trying to predict anything here. If you want to predict something, then buy a stock. Exactly. The idea being that, just as Marcus Aurelius says, don't read so much. Think for yourself. Decide what you think is important. That is what is important. Remember what I always said. Yeah? You don't try to predict the market. Try to take advantage of the market. Right now, they're taking advantage of you if you're not investing. Why? They're going to lower the rates. Okay? The market is demanding it. And the Fed, believe it or not, is going to have to abide by it. They're going to have to lower those rates. Usually, when the market lowers the rates, stock have to go up. Why? It has to go up. If I were to give you $1,000 at 10%, okay, I give you $1,000 at 10%. That money, 1,000% every year, I give you 1,000, right? And so the discount rate at 10%, that money today is worth $10,000. Yes, my friend. Okay, so what are you saying? Well, if instead of making it the discount rate of 10%, the discount rate is 5%, meaning rates are going down, that 10,000 is now worth $20,000. Try it yourself. Use a calculator, a time value calculator. You will see that when you lower the rates, prices go up. 1. 2. When you look at the economy, we don't have such a big problem with recession. Why? In employment. Because the reason unemployment is going up, it's not so much because people are being laid off. It's because there are more people coming into the workforce. Immigration, ever heard of it? That story is being picked up more and more. And 3, we've got some great companies. We've got some great companies. We're at the cusp of something brand new. Remember, at the beginning of the century, it was the American Revolution, right? And between that time and the war, great inventions, great promises. Then, of course, after the war, between the war and really in the 80s and the 90s, it was more of a situation having to do with banking and finance and money being put into the system. And we were making money through the financial system. You know, we had the stories about Michael Milken and the Fed and the rates and the stock market going up, and people start investing in 401k, and we gave all those Nobel prizes to people involved in the financial field, like Markowitz and the guy that said that the markets are efficient, Eugene Farmer, and the guy that allows us to calculate the discount rate, William Sharp, and the guy that told us diversify your portfolio. It will basically risk versus reward. Markowitz. All these people got Nobel prizes, and they contributed to stock prices going up and to everyone thinking about what they made a movie. Remember Wall Street? This is all it was. And of course, since we all went to town, everything collapsed, right? We had 1987, we had 1999, and then 2008. But now we're entering a new age. We're entering a new uncertain age, I have to say, although right now it's looking pretty good. But so you have two forces at play, right? On one hand, you have this whole AI revolution, right? We are now changing our way of life. We're changing the way we're doing business. We're changing lots of things. And at the same time, you've got a lot of pissed off people. The difference between the rich and the poor, as you know, and that's why lots of people got elected in this country and overseas. I mean, in Europe, it's mostly the far right in power because they want to be, their country for their own people. I mean, when we say make America great again, make Italy great again, and make France great again, and make England great again by with Brexit, right? So you got these two forces that are at play. I know. So what the hell are you going with this thing? Well, I have to explain to you the situation. You need to understand what's going on. You need to be educated. You need some perspective as to what's going on. Because these forces are now at play, and they could change everything. So don't be afraid. Don't be concerned. Don't be concerned about a recession. Don't be afraid that NVIDIA is going to do well. NVIDIA is going to come out, my God, they're going to have 80, 60, 80% growth. If you see what these people are working on, and not just NVIDIA, a bunch of other firms, they are working on the next generation. And don't forget, quantum computing hasn't come out yet, but it will. And that's going to speed things even more. It's just people are uncertain. They're afraid. They're being told, oh, be careful. AI is going to take your job away. Be careful. No, don't be careful. Buy. But the thing is, do not buy with your eyes closed. Make sure you understand what you're buying. Make sure that you're comfortable with the company that you're buying. Make sure that the company has a low PE ratio. Make sure that the company does not have too much debt. Otherwise, you're going to miss the boat. And that boat could be going... Now, that boat is not going to last 50 years. That boat, unfortunately, is going to last just as long as the power that be do not start focusing on our ability to refinance our debt. That is going to be the issue you have to worry about. The day they say, now of course you have to understand, you have to know that you don't know, right? What I don't know is when is it that they're going to decide that, you know what, we have a problem with the debt. It is not being refinanced. And the way you're going to know is they won't be able to place it. And if they're not able to place it, and you have to spend money on food stamps, and you have to spend money on retirements, and you don't have the money, you're going to see it. You're going to feel it. But we're not there yet because we still have growth. As long as we have growth, remember, as long as we have growth, you're able to at least control the deficit and the national debt. And the way you have growth is you need some level of inflation. So don't stop thinking that rates are going to drop to zero. That is not going to happen. You have to start to get comfortable with a certain amount of rates and not cut. We're not going to cut down to zero. So you need to be aware of that. You need to be aware that you need to understand that all these people at the end of the day, they're positioning their account. They're seeing what's going on. They want to make sure that you don't realize what's going on. How? Go on the internet, look for interviews with Jim Simmons. Jim Simmons was the most successful investor. He was a hedge fund manager worth $30 to $40 billion. How did he make his money? Through the stock market. He didn't look at financials, he looked at mathematical formula. And he says the way he makes money is a little bit at a time by taking pieces of the market that seems overpriced or underpriced. He's not looking to make a killing on NVIDIA. That's for you. That's for you, they give the NVIDIA. That's so that you could say, you see, look at that. NVIDIA, I think, was it 3,000% over the past 5 years? 29 times. That's amazing. Right? You have $1,000, 29 times. 29,000. Made 100, forget about it. So that's a huge amount of money. So obviously, that kind of name is always hyped up because you understand, you know that 3,000% is more than 10%. I want the 3,000%. I want NVIDIA. I want to get in on it. I want to make money. But you need to realize it is too late on some names. It is too late on some names because there's so much it could go up. But it's not what you need to worry about. You need to worry about how to manage the downside. You need to manage the volatility, and you need to find out how to protect your portfolio. That you don't hear about at all. Yes, they say go buy gold. Okay, well, yeah, because of inflation. But you're always going to have inflation, and frankly, gold is up 30% in the past year. It's okay. The only thing is, what happened when, I don't know how you analyze gold. This is purely a commodity. I'm not a commodity person, so I don't really understand it that well. But, it's up, and yes, it protects you against inflation. I guess that's easy talk. That's how they could justify for you to buy gold. But what you need to realize is, what you're in for is you're here to make money, and you're here to take advantage. And therefore, you need to do what Jim Simmons did. And Jim Simmons would buy pieces. Obviously, he doesn't do it one at a time. He does it thousands of transactions at a time worth $10 million each, right? And they pick up $1 million here, $1 million there. They don't want to move the market. They are doing it without moving the market. Take a look. Look at on YouTube or whatever. Search for Jim Simmons. And he had an interview when he had no shoes on, and he was talking to this guy, and he was basically telling him, listen, what I'm going to do is the way we make money, and not going to tell you, but we use machine learning, we use mathematical equation, complex issue where they're basically kind of playing around by the uncertainty of the market and making money like that a little bit at a time. So they're making money while nothing is moving. You hear these people talk all day long on CNBC and all these channels, Yahoo Finance. Yes, okay, I listen to it, but understand what they're saying. Understand what this. Listen to what they're saying, but understand what they're saying and understand what they mean, and understand why they're saying it. You need to know who the players are. Why are they talking to you? Why is Tom Lee and these people telling you what to do? They're telling you what to do because most of the time they are talking about their portfolio. They want you to buy their portfolio. This whole thing revolves around you being docile and not understanding what's going on. That is something, the point that I always try to make to my students, and I want them to be purely independent. I want them to understand what's going on. I want to understand that if you want to understand what is the risk in the market, somebody tell me where the risk is in the market. There's nothing really much available. Yes, okay, they do show you the beta. If you go on Yahoo Finance, take a look at the word beta, and you're going to see it on the profile. You will see that I think NVIDIA's beta is like 2.2 or some ridiculous amount. What does it mean? It means that if the market goes up NVIDIA goes up twice. So that gives you a notion of risk. Yes, the only thing is that notion of beta is measuring only the systematic risk, the risk that impacts everyone, inflation or whatever. Okay? What is not measuring, and it assumes that risk disappears, the unsystematic risk, a risk that impacts one company. And it kind of makes sense, but it cannot be as 100% accurate, because essentially it says that if Ford if Ford has a strike, the strike is going to impact Ford, but it's not going to impact Motorola or NVIDIA, right? But NVIDIA is going to have something positive happening to it, which would balance out what's a negative thing that's happening to NVIDIA. So therefore, the risk has been avoided. So the only risk that remains is the risk of the recession that will impact everyone. Well, yeah, but I mean, there's no way you're going to match zero. Everything on one end is going to fix everything on the other end. It's not very accurate. Therefore, the beta is not really accurate. Therefore, you do not have a good way for the normal person, the everyday person, to be able to measure what's going on in the market. And that's the issue. So then what you're left with is, okay, well, what is it that I understand? Well, I could show you. Look at the NVIDIA. Doing pretty good right now. Exactly. Now, I'm not saying go and buy NVIDIA. I'm saying go buy something that no one is buying. In my, and this is a plug here, in my Patreon channel, what I'm started to do, and I'm starting to create some portfolios, so you could see what I mean when I say this is a good name. This is the name that basically trading a very low PE, a name that has has some growth and has no debt, right? And I mean, you just can't pick them like that. You have to search them, you have to look for them, and you have to decide whether or not it is good for you. But at the very least, you want to be the one that decides its destiny. You want to be the one that understands what's happening. How do you make money? It's very simple. You make money by making sure you buy something or you do something that everybody wants, or you have something that everybody wants, or you buy something that everybody wants and you sell it for some more money. But you don't make money by running after the ball, right? So that hopefully you could participate in the game. No, that dog is gone. That race has started. It started without you. You missed out on it. You need to come up with your own race. You need to come up with your own business. You need to come up with your own stock. You do not. Now, of course, what I'm here for is to give you some pointers, right? The first point I should give you is, first of all, understand you don't do anything. Second, make sure you protect your portfolio. Make use of options. Make use of insurance, right? Don't just buy one stock and because everybody's buying it and then buy it and then what? When are you gonna get off? And even if you win, even if you make money on that stock, then you have to do it all over again. How often you're going to be right? Listen, 30% of the portfolio managers beat the S&P 500. 30%. So and these are professional. So the odds of you beating the S&P is very, very, very small. So I guess you should join them and buy in their portfolio. But the only thing is that return is not the greatest. That return is probably over the life of the stock market. Let's say the past 20 years. Maybe you hope to make 10%. I didn't start this channel for you to make 10%. I started this channel for you to make 30%, 40%, 80%. And look at some of the previous videos. Look at the name that I've picked, and you could see them. You could see them going up. But then again, you've never heard of those names. It's the same way when I tell my students, you're looking for a job. Where are you going to find a job? Well, I want to work for Goldman Sachs. I want to work for Morgan Stanley. Why? The odds of you getting a job is much smaller there than it is getting for a smaller firm, because everyone is actually looking for a job there. When I used to head the portfolio management unit, I used to hire people, or try to hire people from different schools that we did not know. Try to diversify a bit. Because if everyone is after the same thing, it doesn't work. Everybody's going to work for Goldman Sachs. You have to compete with everyone. And then unless you have a 4.0 GPA or you're an excellent student, that's not going to work. Doesn't mean you're stupid. Doesn't mean you don't know. Doesn't mean you don't try. It just means that the odds are against you. You need to put the odds with you. You need to put it in your pocket. You do not want them to take advantage of you. Listen to what I'm telling you. See what's going to happen in the stock market. Do not waste opportunities, because they're definitely not wasting it. Look at Warren Buffett. He did pretty well for himself, didn't he? Sold all these. I think. In fact, today it was announced that Berkshire is a $1 trillion company. They almost have like $300 billion in treasuries because they sold all that stock in July. Why did they sell? I don't know. You have to ask him. But it's very. How do you know? How do you think that the guy like Jim Simmons made $30 billion and made almost 30% consistently every year? Consistently. How do you think you make $30 billion? Okay, people don't put their money if you're going to lose money with you. Consistently, he made money, and he consistently made money not by looking at the financial. He looked at the mathematical formula. He focused on the price risk, not the credit risk. You don't make money on Wall Street working in credit. You make money working in trading. Trading means price risk. Of course, calculate the price risk. That is very difficult. That is challenging. That is complicated. They're not going to talk to you about that because they don't want you to know about it. Because if you start knowing about it, then you're really going to make money. And that's not going to be a good thing for them. See what I mean? So keep those thoughts in mind when you see what's going on in the market. When you see when they're talking to you and they're telling you this is what we think is happening. Some of them actually quite honest, saying, that's what I have in my portfolio. Why am I going to listen to you? You're obviously not going to tell me you don't like the stock since you bought it. Right? It's like these people that are trying to be elected. They're telling you what I do is great and what he does or what she does is not great. That's it. I mean, they are totally biased. Now, of course, as an elector, you get to decide whether or not you like one person or the other. But the only thing is, no one is telling you exactly the truth as to what is really going on. Again, it's like the stock market. No one knows what's going on. No one knows exactly if the Trump policy is going to work or if the Harris is going to work, because there are too many items. It's too complicated. If they were going to start to talk to you about policy, and you get bored. In fact, I don't know if you recall, but when Hillary Clinton went around and talking about, and she knew her book very well.
She understood everything. She said, why she keeps talking about policy? She's such a cold person. And now that Harris is talking about it, they're saying, well, she's not talking about policy. You cannot please everyone. It's more complicated than that. I don't even think that they themselves would be able to explain to you what's going on. You think Trump could explain his economic policy and what the impact is going to be? No, he's appealing to the simple idea about what it is that you decide. The same way they do the same thing with the stock prices. They make it easy for you to understand what they want you to know. But it's your fault if you don't want to understand. It's your fault if you're not making the money because you listen to them. Listen to them, but understand them. Understand where they're coming from. Understand what it is. Do not look for recommendations or predictions because no one can predict the stock market. It drives me crazy when I see them saying, well, this is what's going to happen to the stock market. I mean, Tommy said the market is going to go up 15%. He said that the market was going to go up in August 15%. How do you know that? Come on. You shouldn't say things like that.